You're watching Startup Central. I'm Nayantara Rai. The biggest news that could come out for startups, the technology sector at large, has actually come over the weekend, and it's from China. Reports suggesting that China does not want edtech startups or those into tutoring to be profitable or make profits. What is this going to do for edtech at large? In China alone, it's like almost $100 billion industry. In fact, this goes very well with China from last year, continuing to smash consumer internet companies. It started with Jack Ma and Alibaba. Remember the now nixed dual listing in Hong Kong? Then after all that fanfare and blockbuster IPO of Didi, the taxi aggregator in San Francisco, I beg your pardon, in China, listed in the United States, we all saw how China clamped down on Didi as well, how the market capitalization has been eroded. Then it was EdTech. And even before the day was over, China started making noises around food tech, saying delivery people must be looked after. Then it's gone after music and how Tencent should not be enjoying exclusive rights to music. So it's pretty clear that China is continuing to smash consumer internet companies. What can this mean for India? With all of this happening in China, will we see Tiger Global, Sequoia, Warburg Pincus, and the list goes on and on and on, becoming more bullish on India? How can India seize this moment? In the first half of this year, we've seen 16 new unicorns being minted and record fundraising of nearly $12 billion. A lot of the capital that might now be nervous going into China, can it come to India? That is a conversation I'm going to be having today with my two guests who are joining us live right here on Startup Central. Ravinder Pal Singh, a partner at Kalari Capital. We're also being joined by Sunil Goyal, the managing director of Your Nest Venture Capital. Both of them are also members of the 256 network. Thank you, gentlemen, for joining us live right here on Startup Central. Sunil, let me come to you first. And you have worked in the past very closely with the center as well when it comes to laws and policies. First up, I think now it's very difficult to deny that China's smashing consumer internet companies. The debate may be why it's doing so. According to you, can all China's loss basically be India's gain?
China has been attracting too much of capital in every sector. And the allocation of capital then when we talk to LPs is significant. Sometimes we wonder, even if 5 to 10% of that capital starts coming to Indian ecosystem, the innovation and entrepreneurship in India will multiply. Last year, China's education tech saw $10 billion of FDI and direct investment, which was 2 times that of US. And the number of unicorns in that country is many times over of US. So yes, China sector has been continuously in any sector, consumer internet, they've been doing better and better. And this was education sector, they were doing better. It gives the opportunity for us to breed companies in India. Whenever we breed companies, we look at, can a company go global? That's the key factor that the companies in India can now leverage on to attract the capital from rest of the world, which was going to China, to India, and then create for the world. So that's the theme that I'm looking at, that will be nurtured and that'll attract capital from the names that you've mentioned, all who've been looking and investing in China so far.
Ravi, if I can now come to you. So this can be India's gain, with what you're seeing as far as China smashing consumer internet companies go. And we're off to a pretty good start. Look at the blockbuster Zomato listing. Its second largest shareholders, of course, from China, the Ant Group. What can India do to really seize all of this capital? Give me your top 3 recommendations.
Look, I actually see this. I invest in deep tech companies. So I see this a wake-up call for everyone that maybe China is without getting into the politics of and financials or nationalism. China is basically showing the world that maybe time has arrived to unlock $100 trillion dollar value in global economy maybe by 2025, 2030. We are looking at companies which frankly I don't call them as tech companies. I call them digital consumer internet or maybe digital companies. If you look at if you look at where the investments are going in China versus what the other side, intelligent machine, space tech, heavy investments in fabs, distributed computing leading the world. Look at amount of money flowing into these deep learning, adaptive manufacturing, EV infrastructures, right from battery to anything in chemical engineering, biotechnologies. I see it in a very different way. I think while we will definitely benefit, I totally agree with Sunil. I think this is also a kind of a call that we should basically seriously dip and create portfolios of truly deep tech companies, because multipliers may come from there.
There is a newsletter on Substack which has gone global, talking about how China's definition of tech companies is different from the West and particularly America. There was America, which has a forte for consumer internet companies and has defined technology as its Googles and Facebooks and all of that. So Neil, this blog, basically this Substack newsletter rather, is basically making a case that China wants to not spend so much on consumer internet companies, that it's net negative, and actually using up the best talent which should be used for the next industrial revolution, or to make chips and all of that. But then if that is the way China is going, isn't that something we in India also need to think about? That do we want our digital ecosystem to primarily be of consumer internet companies?
See, this is the caution that the government has realized in India sometimes back. We interact very closely with the Ministry of Electronics and IT. They have come out with papers of quantum computing, on AI, on any of these things. And even on the chipset manufacturing side, they've been alerting us. Sometimes the calls are for such startups are taken by the ministry officials directly with us to promote these kind of businesses. As Ravinder said, we are very, very clearly looking at the deep tech is one big opportunity. Now, that could be IoT, hardware, quantum computing, AI, whatever names that we may call it. China is leapfrogging on that area. Maybe they are bringing the focus of the investors from consumer internet to those sectors. Yes, this is a caution signal for us. Our government is alert. It is more about having that capital flow to our innovators to come in much faster, easier at the early stage, so that larger businesses can come in, or larger VCs can come in and then take stakes as the technology is proven.
So let's build on that, and I'm going to go across to Ravi now. Ravi, it's not as if China has stopped investing in, let's say, artificial intelligence. It's still the world's largest investor when it comes to artificial intelligence. It surpassed USA some time back. It's not like China's not continuing to invest in the chip industry. It's not like it's making noises against, let's say the Huawei's of this world. So what can be the lessons for India? Yes, we must, of course, try and take that capital that China might lose out on, nervous capital. But the very fact that it's thinking of the next wave, whether it's Internet of Things, 5G, all of that?
Absolutely. Look, it's not about India and China. I'm just trying, I'll try to converge between how Asian, socio-economic political thinking happens. Look, nationalism is core to Asia, and it somehow disassociates with capitalism, not with GDP. So if you actually look at each of these, sectors which you have mentioned, they contribute heavily towards GDP, especially towards, providing employment and sustainable employment for a very, very long time. And look, number says it all. Look at 2020, over 20 billion worth of, if you look at, VC investments in deep tech, 53% were from US, and roughly about 35% odd were from China. But if you look at previous years, China has been closing this gap. So while there is element of maybe hypothesis or surprise in what is happening to consumer internet companies in China, if you go deeper where the investments are going, they are actually closing their gap. when it comes to deep tech and hardcore tech companies, and across all the sectors, right from healthcare to hardcore manufacturing. They are looking at Industrial 4.0 very, very closely, and maybe they basically connect that, not only improvement of GDP, high employment, kind of thing, but also dominance. And China has been a story of dominance in land and in natural resources. Look at rare earth metals. If you connect fab, silicon, and motors or anything which moves, most of them actually run on rare earth metal. China's dominance on rare earth metal is roughly about 89% is owned directly or indirectly by China. So they have an advantage. They understand that particular advantage, and they're gunning for it, and they're closing the gap. And if they close that gap, maybe a new kind of trend will appear, and I can foresee that.
Okay, very pertinent points that you're making over there. And Sunil, if I could now come back to you. There is obviously elimination which is taking place, and we've seen that trend actually pick up for the macros since last year, right? That if you're not going to invest in India, where are you going to invest? Now with China doing what it's doing with consumer internet companies, obviously there's a case for re-rating India. The India bulls will perhaps become even bigger bulls. And is that something you saw playing, let's say, last week when the likes of Tiger Global decided to invest in Zomato's IPO? They're usually in the private markets, but now, we're going to see maturity in the public markets also take place.
Oh, yes. This trend that was demonstrated by Zomato's listing and the number of participants who's coming in and even cornering the stock on the day one of the listing, it's a very, very pleasant stuff that, India internet companies are going to be now attractive, and the world is going to be looking at whatever China did a few years ago. India will be able to replicate at a much faster pace. That's the way the valuation is being looked at. I remember when I was meeting LPs around 5-6 years ago, they used to wonder and talk to us that, you don't have companies for us to invest in. You don't have $10 billion internet companies for us to even look at and evaluate. So we can't even come into to Indian public market and invest in. Thanks now to the kind of companies that are planned to be listed in the coming months or so, we will have an in-depth internet, consumer internet companies to offer the way we had technology companies to offer sometimes back to the international investors to come and nurture our economy. So yes, that's a good trend. That's a positive trend. These consumer internet companies, whatever may be, they are helping generate new kind of jobs. It is taking the access to the internet at a more equitable scale to all consumers all across. So I would say that that journey has started off. While that journey started off, what Ravinder is saying, at the back end, it has to be those deep tech companies that are enabling those companies to be able to come up with much better technologies, much better AI, much more better personalization, customization, and better use of available emerging technologies for the benefit of the customer. So both things have to happen simultaneously. We can't miss the thing on the deep tech side, as Ravi said.
But Ravi, we also can't jump the gun, right? In the sense, there is a process that takes place, or it's a model you don't need to follow. The point I'm trying to get at is, like, even if you look at e-commerce in India, which really started our startup journey, our journey with technology and all of that, you have penetration of about 7%. Your smartphone penetration is still just about 30%. In China, it's 60%. So don't we have to go still through that phase of, plugging the consumer loopholes and all of that? And my second point is that if all of you know that future is deep tech and all of that, then are you also all not guilty of not increasing your allocations to, if I may say so, the non-sexy tech? It's not so sexy to talk about deep tech. It took so long for SaaS, for example, to gain traction.
Yeah, look, I'm an engineer, so I don't differentiate one tech versus other tech. One is digital, other is hardcore tech. Look, little bit of a history of computing. Look, personal computing, US won the race. When web came, US won the race. Mobile computing, well, it was a level playing field, or kind of a level playing field between Scandinavian countries, US, and a little bit of Asia. Cloud computing, US was leading, China, came, and then some smaller, green shoots happened out of India, so in Asia, India and Asia. What you have mentioned, socio-economic gap, should be lessened through digital. Of course, yes, including governance. Of course, there's an opportunity. So I'm not saying one versus others. I'm saying that while we look what is happening in China, there is an opportunity, not only China, but in Asia, but whole of Asia, because Asia has taken lead, in semiconductors, or in what I call as hardcore tech industries. I think India should not, should not be left behind, and there is a merit in Western model when it comes to, creation of SaaS, creation of consumer internet, and there is a merit in some of the companies, which China has come, hard on. But we should also seriously think about why China is doing this, and it is not only about so-called their definition of capitalism or individual wealth. There is a little bit more to it. There is a little bit more if you actually deeply read AI policy of China, or digital policy of China, or deep tech policies, or their exhaustive papers, and they actually mention that. Right from how the education system has to change and how they are going to industries. I'll give you two quick examples. If China is able to create an environment where the cost of compute is further lowered, everything right from anything which happens on mobile phone to anything in cloud, they will actually conquer that. So they're hitting that. Also, as I mentioned, resources are in their favor. Look, anything which is built on a motor within a mobile phone, or a battery or something like that, China has a dominance. So they are going to leverage on that, and I think India should not be left behind in this particular race, because remember, for all the other things which you have mentioned, we lagged behind, and this is actually an opportunity for us to learn and basically even beat China in some of the things.